Hi guys, so we're here for our second market analysis video, 23rd of November. We'll be going through a similar structure as the last video, looking at ES, NQ, DXY, BTC, and ETH. Okay, I'm going to try and keep this video short and sweet and start putting out some bite-sized market analysis videos for you. So look, we're going to look at ES to start, as we did in the last video. We've still got this high time frame bearish market structure in play, okay? High, low, lower high, lower low, lower high, lower low, and then potentially coming into a lower high zone here, okay? And I know all eyes are on these levels at the moment. A lot of people are looking at this higher time frame diagonal resistance. We've got these horizontal levels of resistance as well. But I want you to keep in mind that it's not just about an A or B scenario playing out in that, A, we break out, B, we fail. What we could actually do is deviate the trend line, okay? And what that would look like is still something that would maintain bearish market structure. So we're on the 3-day here. We can see that here we have a 3-day order block, the green candle before the down move. And what we could see, hypothetically, is price coming back up here, breaching past the horizontal level, retesting the trend line, coming up, have everyone think that, the bear market's over, blah, 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 we're back to full bullish conditions, only to fail there, make another lower high, and then come down and make the lower low, okay? That is very much a possibility. So the reason I want to talk about this as a probability and perhaps even a possibility or a likelihood is the fact that, we have this high time frame bearish market structure in play. And although we could fail at this trend line and horizontal resistance meet point, there is also a chance we could go up to the 3-day order block and, upper region of the market structure defense zone, simply based on the momentum indicators. So if we look at the 3-day RSI here, we can see that it's just pushed up past mid and it still has a lot of room to go until it's anywhere near the sort of overbought regions, okay? Flip down to the daily, again, you can see where we're at here, standing at 61. We've still got loads of room to push to the upside before the daily gets overbought by any means. 12-hour, again, similar picture, plenty of room to push to the upside. And even looking at the 4-hour, we can see that even on these time frames, we still have a lot of room to move to the upside, okay? So the RSI has got quite a bit of room on multiple time frames. I feel like ES could push a fair bit higher. I don't think the trend line has to be the be-all and end-all in terms of, bullish above, bearish below. I'm not going to be that rigid and be a bit more flexible, especially considering the 3-day order block we have and, that sort of market structure defense zone in that area as well. So with ES, it's very much a keep an eye on it situation. Once we start moving up into these levels of interest, these horizontal and diagonal levels here, and then again, 3-day order block here, I will be looking at, multiple time frames, oscillators, RSIs, looking for overextensions and divergences for reversals or absence of for continuation, okay? Okay, so a quick look at NQ. We are still in a similar position as our last video and ES in that 3-day bearish market structure, still firmly intact. Okay, so the same principles apply, right? It's not a be-all and end-all above bullish, below bearish scenario in terms of our resistance levels. As long as we maintain bearish market structure and fail at this high here, okay, putting in a lower high somewhere around this area, we are still primed for a lower low and continuation to the downside. So that's our overall view of the indices. Okay, not much has changed from the last video at all. We are still within higher time frame bearish market structure. Any pushes to the upside at the moment, we still have to consider as bear rallies. And, as we said, even if ES breaks through those horizontal levels of resistance, breaks through the trend line, we still could fail at the upper levels of that market structure defense zone, okay? Until we break past that level and start putting in higher highs, we have to assume that the lower high will be formed and we will continue within bearish market structure. So over to DXY, we're looking at the 4-hour here. This chart is completely untouched and unchanged from the last market analysis video, okay? As you'll recall, we said that the 109 level really needs to be reclaimed for any sort of bullish argument to come back on the table. And the 4-hour bullish divergence we noticed across both the AO and the RSI did play out to an extent, but then we bumped into this resistance level, failed to hold it, and now we're coming back down again, okay? So these levels remain unchanged. The 107s and the 109s are still key levels to reclaim, before any sort of bullish argument comes back on the table for the XY. So finally onto BTC, and we're looking at the daily here. Okay, so in the last market analysis video, we were honing in on this range bound environment or consolidatory structure here on the lower time frames. Okay, and if you recall, we were looking for a sweep of the highs or a sweep of the lows as our first port of call and saying this is the most likely outcome. Okay, we did in fact get the sweep of the lows and have started pushing to the upside. But I want to draw your attention to what happened within that breakdown, okay? So if we take the candle bodies, we can see that price made a lower low, whilst what's happening to the indicators, we are making higher lows, okay? So the reason I wanted to draw your attention here is because daily divs of any kind are both relatively rare and powerful driving forces. So once they get put into motion, they are very much indicators we have to keep in our minds in terms of our directional bias, okay? So I just want to dial down to the lower time frames. We're looking at the hourly here, and I just want to draw that range back up, okay? So we can see the high, the low, and we plot on our basic range. We can really see how clean that sweep of the lows was, okay? So low formation, price is range bound, comes down, sweeps the low, retests the low, and starts pushing to the upside, okay? So from a charting perspective, we have the daily bull div in play, and we also have a clean sweep of hourly range lows, okay? Very textbook, and now we're pushing up. But there is one thing I wanted to point out, and that was the spot v perp dynamics, okay? So we'll just flick over to XO, we can have a look at those. Okay, so just to recap where we've got to so far, indices look lower time frame bullish, okay? We have our higher time frame considerations to keep in mind, but the lower time frames do look bullish for continuation. DXY is, looking pretty bearish at the moment. We've got some hard work to do to reclaim levels to the upside. And Bitcoin's put in its daily divergence and swept hourly range lows, okay? So the market looks primed for the upside. But just to play devil's advocate, I want to bring our attention to the spot v perp dynamics. Okay, we can see that move from the upside has been majorly led by perps as opposed to spot. Okay, so what does this mean? It means that the perpetual markets are driving price to the upside while spot is doing relatively fuck all, to be honest. And for any sort of real move or short squeeze to the upside, i.e. the daily div plays out and we move large percentages, spot really needs to chase and catch up with perp, okay? So I just wanted to point that out to you guys. That being said, we can look at the delta dynamics here and see that once the hourly range lows were swept, we put in a significant amount of both spot and perp negative delta. So what that means is there's a passive bid side participant or participants that are absorbing market sells, stopping price moving to the downside, and that's what's caused us to pivot back to the upside. Okay, so now on to ETH. The bullish case for ETH isn't quite as strong as BTC in my opinion. I would have loved to see these hourly range lows swept as well, and with force ideally to really sort of substantiate a bullish argument to the upside for ETH. That being said, it did break past this sort of trend line that was capping it to the downside pretty effectively on the lower time frames with multiple touch points. And we also put in a very nice structure on the AO, okay, with this sort of triple peak div here. But again, worth noting that sort of perp leading dynamic is still present on ETH as well. So if we flip over to XO quick, we can see that ETH spot is in fact downtrending here whilst perps are pushing higher, okay? And this is really what's leading the move. Guys, this is not what we want to be seeing for a significant move to the upside, okay? I think it's imperative we keep eyes on this, and if we do push higher, see if spot can chase up, but at the moment it has quite some work to do and certainly isn't looking likely at this point in time. Okay guys, I want to wrap up there and note that we have arguments for both sides at this point in time, okay? Mainly the bullish arguments prevail in that the indices look good for lower time frame upside, DXY is struggling, and we've both put in a daily bull div and swept hourly range lows on BTC with high negative delta, okay? The only thing holding me back from being full bull, lower time frame and execution wise is this perp versus spot dynamic, which I'm really not a fan of. So at current, if you aren't in from the sweep of the lows, I'd err on the side of caution, watch the indices, see how they react to the levels above. Watch spot perp dynamics, see if spot can chase, and exercise some patience, looking for high quality setups without hitches like we have here in terms of perps leading, okay? But if you're already in longs as I am, then just keep the info we run through today in the back of your mind, analyze the situation as it unfolds, and be savvy with your decision making. And yeah, that's it for today, guys. We'll check in again once the charts develop, and I wish you all happy trading.